The 180 million Toyota Center transformation, it's going to be a strategic play for Houston commercial real estate. And the planned 180 million redevelopment of the Toyota Center is more than a capital improvement project. It's a strategic repositioning of a core downtown asset, and it's designed to drive long-term value across Houston's commercial real estate or CRE ecosystem. So, with construction scheduled to begin after the 25-26 NBA season and completion targeted for 27, this initiative reflects a broader trend that aging urban assets must evolve or lose relevance in an increasingly competitive national landscape. Astrodome's a good case. The core strategy, repositioning a legacy asset. So, from a CRE perspective, this project follows a classic value add and repositioning playbook. It's a modernization of a 20-year-old venue, an expansion of high margin revenue streams, and it's enhanced user experience to drive repeat demand, along with operational flexibility for multi-use programming. So some key upgrades are going to include a 20,000 square foot glass atrium, premium entry and event activation space, expanded VIP and hospitality suites, improved event infrastructure for concerts, conventions, and sports. So the translation there is this is about increasing the net operating income through diversified revenue streams and not just aesthetics in the building. So why this matters for commercial real estate? One, there's a downtown activation multiplier. So large-scale venue investments like this historically create spillover demand for the area surrounding. And that can include hospitalities, which is hotels and short-term lodging, but also retail, restaurants, and entertainment concepts, but parking and mobility infrastructure and mixed-use developments. And this positions downtown Houston as a 24/7 destination and not just a weekday business hub. Two is convention and event economy expansion. So the Toyota Center upgrade aligns directly with Houston's growing convention footprint, and it's a major event pipeline. So it gives one more venue for those kind of events, but it could be national political conventions or large-scale sporting events or concert tours and entertainment programming. And this reinforces Houston's ability to compete with cities like Dallas or Atlanta or Las Vegas. And for investors, event-driven demand is going to equal predictable spikes in revenue across several asset classes. Premiumization, so basically being able to earn a higher margin, and the shift towards premium seating and VIP experiences and curated hospitality is critical. Why? Well, because it costs more for one, but premium users are also less price sensitive, and corporate buyers drive recurring revenue, and experiences outperform traditional ticket models. And this mirrors trends across stadiums, but also mixed-use retail, Class A office repositioning. And it's an institutional signal to the market. Us being able to make and commit $180 million reinvestment sends a clear message. Downtown Houston is worth betting on. And that's the type of capital deployment that often precedes increased investor confidence, cap rate compression, and we're thinking long-term cap rate compression, but also new development pipelines in the area. And the bigger picture, when you stand back a second, is the CRE flywheel effect. And think of this project as a demand engine. A venue upgrade begets and attracts bigger events, and bigger events increases foot traffic, and more foot traffic drives retail and hospitality demand, and that supports new development and leasing activity. And this is how urban core regenerates without relying solely on office demand. So let's look at some investor takeaways and where the opportunities might be. And if you're an investor, a developer, or a business owner, here's how to think about this. Retail and restaurants. So those users should target locations within walking distance of the arena. Hospitality investors, watch your ADR or average daily rate trends post the upgrade, and hopefully they go down. Industrial and logistics, and increased event volume equals back-end supply demand. But also, land and development is to focus on underutilized parcels near the convention corridor. And the final thought is that structure is worth more than hype, and it's not just a headline, it's a signal. Smart operators will underwrite demand shifts early, position assets before pricing adjusts, and structure deals around future NOI growth and not just current rents. And the opportunity isn't in reacting, it's in anticipating the ripple effects. And that, my friends, is it for the day. Please visit my website. You can get a hold of me, schedule a call, and I'd love to talk to you more about your situation. HoustonRealEstateBrokerage.com. Thank you for your time. Have a good day.